As we head into February, one of the things that all of you should be receiving about now is going to be your year-to-date P&L for the last year. But the question becomes, what do you do with it? What is that information even telling you, and how is it important for your success in 2024? Well, today we're going to take a look at an existing business's year-end profit and loss statement, and I'm going to show you how you can use the information on it to really create some sales. And in this particular case, we're going to show what the business owner did differently this year versus last year, what the numbers are telling him. So this way, when he goes into this year, he's got some really good information to help him grow those sales and grow those profits. So if you're looking to learn how to read your profit and loss, stay tuned. Hey, badass business owners, my name is Tammy, and I'm here to help you grow your business, but more importantly, grow your profits. And big chunk of growing those profits and growing those sales is understanding your business numbers and how your business numbers play a critical role in that. So with that, let's head on over to an existing business's profit and loss, and I'm going to walk you through it. All right, here we are looking at a P&L, and in advance, I'm going to apologize to those of you that are watching or listening on a podcast, because numbers are never fun to do on a podcast, but I'm going to leave a link to the video in case you want to go check it out as well. The P&L that you're looking at happens to be for a landscaping business. It is for an entire year broken down by month. It's my favorite way to look at year-end P&Ls because it's going to have so much good, juicy information. This one happens to be QuickBooks, which is the number one recommended software I feel for small businesses because I think it's easy to use and I think the reports are really easy. You can check out the link in the show notes. But what we're here for today is how do we use these numbers to help us? Now, even for those of you that hate numbers, hate looking at them, I'm going to show you how you really don't have to get deep and dirty and understanding different numbers, because really you're just going to look at them and they're going to tell you something. And that's really what I want to try to get across today, is how to easily look at this and look at opportunities, and to see what happened last year and possibly the year before, because we're going to look at two different years and compare them. And what's going to end up happening is you're going to see some trends for this business owner to use for this upcoming year. All right, so when we're looking at this particular business, let's look at 2023. You'll see January they did 21.8, then 28, 30, 19, 32, 41, 18, 46, 61, 32. So their monthly sales are all over the place. Now you would think a landscaper would have a season, right? And normally they do. This particular business owner, when we go back and we look at 2022, made a transition to where what they were focusing on before isn't necessarily what they're focusing on now. Now they're doing these bigger hardscape jobs, which can be all over the place based off of the size of the job. In January, they did 40, 21, 50, 35, 31, 49. So you can see last year, they actually started off much stronger than they did in 2023 when you're comparing them. But what's interesting is if we look at the end of the year, they finished 2023 at $384,000, where they finished 2022 at $371,000. So really, there really wasn't much of a change. I think I figured it out. It was like 3% increase, but a lot of things changed. And what happened is they started out getting stronger and stronger as they got on track. So they were doing really well. If you go back to 2021, then some life things happened and the business kind of got put back on the back burner, if you will. Things started to come down, kind of went a little all over the place, then started getting back on track later in the year last year. And you can really see the difference as we start looking at some of those, because you'll see here, the back half of 2022 was 19, 27, 35, 12, 36, 9, where the back half of 2023, 18, 46, 61, 32, much stronger. And like I said, they were able to pull it out because they were trending at the beginning of the year really bad. They were going to actually not only decrease 2022 over 2021, they were on par on track to go again in 2023. But got things back on track, started making some things happen, and they continued to do that because even in January of this year, they blew away January of last year. And that's one of the things you want to do is you want to make sure that you're comparing year over year. And we're going to show you that here in a minute of how you can do that. But for right now, I'm just kind of pulling out some things that you want to look at when you're just looking at your 2023. So another thing you can look at is their cost of goods. You know, your cost of goods are going to be your wages, because if you have a service-based business, somebody has to do it. He has employees. And if you don't have employees and it's just you still have wages, right? Because you should be paying yourself as as an employee. And you want to make sure that your cost of goods are capturing not only the materials, the ingredients, whatever it is that you're using to provide or to make, but if you have labor involved to make it or provide it, it's technically a cost of goods. So you want to have that in there. So when we look at that, they were 16, 13, 15, 13, 20, 13. The big jump in May, I'm going to bet you was a 3-pay period. Because usually when you see same jump, same jump, as you know, we have some weeks where we have that extra week of pay. And typically that's what ends up happening. 20 was one of those weeks, 13, 10, 17, 26, 19. But you can see his payroll kind of went up, but he also did more sales in this 1 month that had the 61, which was huge. His payroll jumped. More than likely, he had higher material costs, which he did. His labor stayed about the same, but in this particular case, it was more of his labor that did that. I mean, his cost of goods for the materials. Now, when you get to your expenses, you're trying to look for some things in expenses are going to change month to month, right? Some things are going to stay the same every single month. Some are billed to you quarterly. Some are billed to you annually. So what you're looking for is what is standing out in any of those months, and is that something that's normal? Should you always plan for it? In his particular case, you're going to see his total expenses were $4,000, $5,000, $7,000, so it jumped up. Another $7,000, $9,000 jumped again, $6,000 just might as well be $7,000, down to $5,000, $6,000, $11,000, big jump, back to $8,000, $5,000, $10,000. Overall, he runs pretty good expenses. I think it's like 23%. So his percentage for his operations is actually pretty good. He does a really good job there. But you're going to notice that we have a couple big numbers here, right? Professional fees, he had a huge jump here at $1,974 they had to pay, where he doesn't have that really, except for a few other things here, maybe a little high in the month before, but normally it's not a big jump. He happened to have one. The key is, does he know what that was for? Or was it a surprise when he all of a sudden got the report? And I can't tell you how many people that I sit down with in their year-to-date numbers, and when we're asking, well, what was that big charge? And they don't know. And that's one of the things I want to challenge you is when something stands out, this is why you want to look at it monthly, because in that month, they should have pulled out and said, hey, what am I spending this money on? What was it for? You'll see another one right here under payroll expenses, $4,000 when it's normally under $1,000, and then $3,700. It's going to be workers' comp. He doesn't have that broken out, or payroll taxes that got paid, stuff like that. But once again, don't assume. Always make sure you dive in and find out exactly what it is that you're spending that money on, because you'll see that normally it's nowhere near that. So that's what you're looking for. Same thing under insurance. Did something get paid? Vehicles. In this particular case, he's pretty steady at the $1,000. He had a higher month at 18. Did he get some tires? Did something happen? Stuff like that. And then finally, we want to look at our net income, right? What's the potential profit that we have before taxes and reinvesting back in the business? And you're going to see here that it was $14,906 negative $2,700. We're going to come back to that one because it's the only month that he lost over here, another negative $5. Barely broke even over here in December, but then he's got these big months at 21, 22, and 23 for a total of $87,000 after he paid himself, because he does pay himself as an employee. Now let's look at some things. When he was up 23, that was the month he did 61. When he was up 22, he did 46. And when he was up over here, 21,000 in profits, he did 41. Now what's interesting is you'll notice that the 2 months he did 41 and 46, he had a profit of over 20,000. But the month he did 61, he also only barely did 20. Why would that not be? That's a $20,000 jump. So you want to ask yourself, why, when you jumped 20,000 in sales, did your profits only jump 1,000 or 2? Well, if we come down, we can see that in that same month of 61, it happens to be the month that his cost of goods, right, for materials was double what it normally is. It was an extra $8,000. So a huge chunk of the extra sales was actually due to more materials were being used on the particular jobs that he had in that month. Now, it could be a pricing issue as well. Did he capture it as best he could? There's a lot of things we can go into to try to figure out why was it so much higher from a different one. Now, if I remember correctly, I believe it was a specific job and it just happened to have high cost of goods. So he had to bid it a little bit lower than what he normally does. So the profit kind of gave up a little bit. You'll also see that, he had a high auto truck that month. And this happened to be a month where he had a high payroll expense of $4,000. So that ate away at some of that extra $20,000. So materials ate about $8,000. This payroll cost caused another $4,000 that he paid, another $2,000 right here that he normally didn't have under small equipment, which is probably what he rented to be able to do that particular job. So you can see all those things added up to cause him to, it's still a great month at $23,000, but you would think doing $20,000 more in sales that you would have had a much higher profit. And you can see he didn't because of a couple different things that popped through. Once again, you got to look at what's going on. What's the story? What's it telling you? And do you know the answers? Because if you're like, I don't know, I don't understand, that's part of the problem that I've noticed with people is they just don't ask the questions. Okay, I want to look real quick at these 2 months that we had a negative loss. We lost 2,700 in April, and we lost 5,500 over in November. So what was going on in those two particular months? You'll see here in April, sales were only 19,000, which is much lower than what he was doing in almost every other month. And same thing with November, it dropped down to 16. So first and foremost, we can say a big chunk of why he lost money was just plain simple. He had a sales problem. When you have a sales problem, it's hard to create profit because most of your other expenses are staying very consistent. And we're going to notice here in April, his payroll was $9,000, but most of his other months are between $8,000 and $10,000. So his sales were down. His payroll remained the same because he kept his guys on. So that obviously had no sales to offset it, and it killed him. Same thing over here in November, except for November, his employee wages were down a little bit more. He let some people have some time off. But you can see here, his cost of goods was $9,000 in November on $16,000 in sales. So once again, it ate up so much of his profit. Now, part of that's because sometimes he has to buy the materials before he gets the sales. He does collect money for the materials, but sometimes the way they hit and the money and all that other stuff, which is why we really want to make sure we dial down by month, but we also pay attention to the year because it all should come out in the wash, right? But that's one of the reasons, plain and simple, why he did not have any profit. He spent all that money. Over in April, the materials were much lower at $3,000, so not as big. But if we come back and we look at the expenses in April were $7,000 and the expenses in November were $58,000, just $6,000, but they actually both were very controlled compared to other months. They're at or below what they normally are. So he didn't go out on a spending spree or anything like that. Did he have some things hit? Yeah, April he has a $1,300 charge where before it was normally $300 to $800. So there were some things that definitely added to the loss that he had, but ultimately you can see sales was the number one driver as to why he lost money in both of those months. Now, here's another interesting thing that I want to show you. Let's go back over here to, let's start here in 2023. You'll notice the sales were $382,000, right? And last year it was $368,000. And I'm sorry, I know this is small when it's on a screen for some of you guys, but $368,000. So sales were up 3%. I did write that down. Let me grab this just so I have my little percentages. I did them in advance so you didn't have to watch me do the calculator. Okay. Now, on his cost of goods, the cost of goods were $205 this year. His cost of goods last year were $219. So his cost of goods last year were actually higher than they were this year, which tells me that his pricing got much better because he was able to put a little bit more of a profit into those cost of goods. And he also prices were coming down on some of those materials that added to it as well. But when it comes to payroll, let's take a quick look here. He did $98,000 in payroll this year, but last year he spent, actually has 3 lines on here if I remember right. So you got 95, another 400. So his payroll stayed about the same. So payroll didn't change that much. So it was, he really controlled his payroll for getting the same amount of sales. So his payroll did not really go up. When you go to the expenses, this year, he had $89,000 in expenses. And last year for similar sales, his expenses ran $94,000. So part of what he did is his expenses went down this year about $5,000 for the same amount of sales as it was. Now, once again, we could take the time to dive in. I'm just trying to do this quickly for you guys so you guys can kind of see what's going on. But here's the most fascinating thing. Remember I told you the sales were only a 3% difference, right? But what I love is look what happened on his profitability because he really got his head in the game and worked on how he can become more profitable through his pricing, through his purchasing, through what he was spending his money on. This year, his profit was $87,000. But when you come over here to last year for the same, pretty much the same sales, his profit was only $54,000. So that's an increase of what, $32,000, basically a 54% increase, 3% increase in sales, but yet 50% plus of profit because he really started paying attention to the numbers and really watching what he was doing from a pricing standpoint, from the way he was running the business and everything else. And he never ran a bad business. Like I said, his expenses are 23%. His biggest expenses are the materials and his labor, and he runs lean and mean with his people. So he was able to put more profit to the bottom because he was paying more attention and really making sure of what was going on. Now, I can sit here and I can dive in even deeper into all kinds of different things. That's one of the things that I plan to continue to do, is to get P&L. So if you ever want me to put your P&L and kind of show it, or do a private P&L review with you, I have those as well that I can do. But the main thing is you want to make sure that you're looking at your P&L. You want to look at it monthly so that you can catch things. You want to look at it for the entire year. You want to compare the year before. There's all kinds of really good stuff that you can do that I think you're going to find that when you're doing it, it's really going to open your eyes to what's going on in your business. And a lot of the changes in his was because we were looking at each month and we were looking for opportunities that he could exploit. And you can dial this down even more, because I'm a big fan of taking your income and breaking it down to categories. Because if you have categories within your sales and you can kind of see, is this category doing better than this category? Oh, wow. Why did this category go down when this one went up? There's so many different ways for you to look at this. I do cover it in the Know Your Business Numbers course as well, where I show you some of this stuff. And I'm going to continue to improve those videos in that training, because I want to really give you guys as much information as I can to really help you become even better at running your business. So I hope you enjoyed going through a P&L and getting an idea of what to look for. I know it's hard to do because it's just a bunch of numbers on here, but it at least gives you a start. Please grab your P&L, start looking at it. Don't get scared by the numbers. The numbers are just numbers on a page. It's the information, it's the story that the numbers are telling you. And my goal is to continue to help you read and understand that story. Matter of fact, I had a great idea for a video earlier today. I got to figure out how to do it though. But with that, I hope you got something out of this. Make sure if you like, hit subscribe so you don't miss any other ones, because we're going to continue to talk about your business and how to make more profit. With that, I'm out of here, and I'll talk to you next time. Bye for now.